Welcome and good day. My name is Keith Allen from Material Indicators. Welcome to MI Trading Academy. Today we have a long-awaited one by popular demand. We're going to dive into some advanced strategies with our MTF Mean Reversion Indicator. So yeah, today we're going to dive into the MTF indicator. As I said, we're going to learn some different strategies for using this mean reversion tool to help you turn capital and grow your portfolio. Of course, before we get started, got to do a little bit of housekeeping. I am not a financial advisor. Nothing you hear here is going to be considered financial advice. Please do your own research, do your diligence, and never ever risk more than you can afford to lose. Of course, we're going to talk about some numbers here on MTF performance, and past performance does not guarantee future results, but we have been collecting this data for a very, very long time. And, have amassed at this point nearly 100,000 signals between BTC pairs and USDT pairs since like about first quarter, April, I think, actually, of 2019. Hey, and if you'll do me a favor, if you like the content here, please like, comment, subscribe, share it with your friends. We are a young, growing startup, excited to have an amazing global community of traders joining us on Telegram. We invite you to join us there as well. So I guess we should go ahead and dive right in. And I'm going to tell you, folks, you may want to grab a pad and pencil for this. I'm going to cover a lot of ground here today, and I'm going to try and do it as quickly and efficiently as I can. First question here, of course, is what is mean reversion? And if you don't know, I encourage you to look in our on the YouTube channel for the intro to MTF Mean Reversion. It's a very general overview of this tool and the principles of mean reversion. But in short, mean reversion means that the price of an asset wants to revert to the mean. So the mean being the middle. And I'm going to just use this title slide here to kind of illustrate it here. Actually, you know what? I'll go to a chart, and that will make it easier to illustrate for you. There we go. Now you can see my screen. Beautiful. So if you notice here, I've actually adjusted my indicator here to clean it up, but I did keep that center line, which is orange here, and you can learn how to stylize the chart in the previous tutorial on the intro to MTF. But mean reversion basically and simply means that as price moves away from the mean, it wants to return to the mean, like a spring, right? The further it gets away, the harder it wants to snap back. And as you can see, these are actually MTF tier alerts down here. And when price hits that level, it wants to snap back to the mean. And there's your swing. There's your scalp. There's your swing. Now, the same thing happens when price is moving above that level as well. So what we're going to go through today is a series of strategies that range from simple to more complex. And, I know a lot of you from the community are here to see how Brad is achieving the astronomical numbers that he's been achieving, and we'll get into that in a bit. That's going to be one of the more complex strategies. And I do want to tell you, stay till the end, because I'm going to have something special for you guys when it's all said and done. So today, some of the strategies we're going to talk about using the MTF Mean Reversion Indicator as a buy zone screener, how to use it for scalping, how to use it for swing trading and what we call groove trading, how to use it for a buy the dip strategy, and how to use it to accelerate portfolio growth with accumulation strategies and compounding. So let's go ahead and dive in here. Using MTF as a buy zone screener. So probably one of the most conservative ways to use this tool, because there are literally thousands and thousands of signals coming out every year. We've been, as I said at the beginning of this thing, we have been aggregating our signals since April of 2019. We are close to 100,000 signals between BTC and USDT pairs. So that's pretty significant. So you get opportunities, basically as the alerts fire, consider those, a potential buy zone opportunity. And if you use fire charts, and I know a lot of people on the live stream here are using fire charts, it's a great way to compare where the signal came in and see if you actually have support in that level. Does it mean that support has to hold? Of course not. There's no guarantees, obviously, but knowing that you have a range of liquidity to dampen the fall, and that at some point in time you're going to find recovery, then that's how you can mitigate a lot of risk and cherry pick the trades that you want. Now, you can also, of course, use the MTF indicator to command your bots. So you can use it to automate by sending signals to your bots, or you can take the manual approach and use fire charts to validate those setups and pick the trades that you want. Now, when it comes to your bots, you could set up individual bots for individual assets, or you could set up composite bots that will fire for pretty much every asset in that base currency pair. So you could do one for all BTC pairs, filtering out the ones that you don't want, leaving in the ones that you do. You could do the same for USDT pairs. And you can, of course, also use this indicator on stocks. Pretty much any asset that you can call up on TradingView, you can get the indicator over, and you may want to adjust it for volatility. And again, that principle is something that you can learn in the intro to MTF video, and I'll actually have the link to it in the description of this one. So if you're not familiar, go back and take a look at that one. But you can literally use this for pretty much any asset on TradingView, and use it to automate and make money in your sleep and while you're on vacation, or take that more measured approach and cherry pick them along the way. Let's now see. So we talk about some incredible performance numbers here, and I dove into those a few weeks ago on the last live stream that I did, and we have aggregated even more signals since then. The numbers, believe it or not, have gotten slightly better. So like I said, we're talking about roughly almost 100,000 signals combined. A little more than 24,000 of them are BTC signals. And the reason for the offset in the number of BTC signals and the number of USDT signals that we get is because we use different deviation levels on those. And we'll get into that in a little bit. But there are more USDT signals than there are BTC, because BTC is on such a rampage these days, and most of us seem to be interested in accumulating it. The numbers I'm going to share with you here, I'm focused on Bitcoin. So here's a snapshot of a graph that shows the distribution of risk and reward, meaning the max drawdown is the blue side, and the max profit is the green side. And as you can see, there are some a few that go into the stratosphere here. I mean, there are on this latest update. One second, I want to make sure I'm giving you guys the right numbers. I wrote this down the other day. On this latest update, we have over 500 coin pairs did, or over 500 signals rather, did over 100%. But that's certainly not the norm, right? So we're talking over 95% hit 1.25 and 2.5%, and then we step our way up into the 5% range, which seems to be an area where the risk reward optimizes a little bit, but you have to really do your own risk management on this. I'm not going to tell you where to set your stop losses. I will tell you this, that a lot of the strategies that we're using are high risk, and we're not using stop loss because we're DCAing. these signals. But we'll get into that a little bit deeper too in the next in a later portion of this when we get into Brad's strategy. Duration of time. We talk about turning capital and doing it fast. How fast does that happen? Well, we have been measuring all of these signals for a 5-day period. Why 5 days, you might ask? Well, simply because we want to turn capital and we want to turn it as quickly as we possibly can. So we track them for 5 days. The vast majority close in profit, close a lot sooner than that. Give or take 36 hours is about the average for a lot of these coins. So we talked about using it as a screener. Now let's talk about swing trading and groove trading. All right. So dare I share a screen again? Let me see if I make sure I get this before I dive into it. Okay. Okay, here we go. And double check. Okay, you can see my screen. Perfect. So this is really when you load the indicator, you'll see all of the channels on the MTF chart, and these are fib channels. Obviously, this is a 1-minute time frame, and top of the grid top of the channels is 1. Bottom of the channels is 0. This midline right here, which I made white so it's easy for me to see. You can see now where the tier signals, these are the MTF alerts, have been firing. But on days or weeks even when price action is sideways and we're not getting a lot of volatility and we're not getting a lot of signals, there's different ways that you can find opportunities to make money. And we actually came up with this very, very early on, even before we got to the USDT pairs, even before we even created the USDT signals. So I'm going to widen this out a little bit so it's a little easier to see. And basically, what you do if you're gonna groove trade or swing trade, not using the signals, but to try and basically find opportunities that might not be triggering a full signal. And again, you can do this on any asset. Is you're trying to identify patterns in the coin movement, and you'll notice in this example, every time we get down to this line, about this line right here, we get a bounce. Of course, when it goes all the way down to fire signal, we get a better bounce. But let's just say for this exercise that we weren't getting there. Okay. And again, you could scalp here. So first thing to do is identify this pattern and see where this thing keeps bouncing from and see what kind of profits are available there. I'll click on my price tool. I'll click and see that, okay, there's a quick 3%, maybe even more, right? Let's look at another one and see if this is a replicable pattern, if it keeps happening, right? Let's do another one. Okay, these are quick scalps. You could take it, you could certainly take it more, ride it as far as you want to ride it. But we found that by going with smaller, more easily attainable and repeatable profits, it's easier to replicate this thing. So this is the channel or the groove. And I guess if you took it further, you could call it a swing. But this is just one way when the action's not happening, when you're not getting the signals and you want to try and do some scalping, this is an effective way to do it. Okay. And you can also, note that if price did come past this point in this particular scenario, when price does come past that channel that you were hitting, it's going to fire an alert potentially. And so you DCA here and you have a bigger position. And as the bounce recovers, you're back to positive territory. So in a nutshell, that's just using the groove. And again, I want to let you guys know if you have questions on this stuff and we don't get to it here, you can always reach me in the Telegram community, and we can do a little more session here. All right, let's keep this thing moving. Lots to cover here. Buy the dip. This is something that, we all want to do, especially when you're accumulating an asset, right? So MTF isn't typically, the way that we use it most of the time hasn't been for a long range strategy. But there's no reason you can't apply it to a long range strategy if you're trying to accumulate an asset. And whether that asset is Bitcoin or Ethereum or whatever alt that that you've been watching and had an eye on that you want to grow your position in, or whether it's a stock, same principle applies. You can set alerts to buy those dips and accumulate and DCA your way into a larger position. Bitcoin is a great example. I'm going to go back to that screen. Okay. So, depending on the volatility and where price sits, you may or may not want to be accumulating in this range, depending on what your position is. But as it moves into a range that you're comfortable with, you turn on that buy the dip bot, or do it manually, and pick these signals as you like them. In the long range, if you are bullish on an asset, then this is a good way to buy those dips and accumulate more and more of it. Very simply, you see that sometimes there is more drawdown, right? And you can either decide that you want to pass on that position, or you can use it to DCA even further. But ultimately, we're seeing the vast majority of them bounce back into profitability. If you're doing this for a scalp or a swing trade, this is the easy money. If you're using it to build a greater position, this is a good way to do it and a great tool for doing that. So let's get into something that everybody has been very, very excited about. Using MTF for aggressive accumulation and growth strategies. We have seen the astronomical numbers that Brad has been putting up, right? Insane. Absolutely insane. And, I thought I was doing well until Brad started showing me what he was doing. And then he just kind of shamed me, but that's okay. We're friends. It's okay. It's allowed. All in good fun. But seriously, this is astronomical. If this doesn't get your attention, you shouldn't be here. Simple as that. But this is not easy to attain. This is not typical results. And I'm going to throw that past performance disclaimer out there again. Past performance does not guarantee future results. This is not easy money. Okay. It takes work. And a lot of you here are not scared to put in that work. So I'm happy to share this with you. And hopefully you can gain something of it from this that works for you. So part of this strategy that Brad has been using has been, number one, picking the right assets to get into. Okay. And he's cherry picking the trades that he wants to get into. He's cherry picking the coin pairs that he wants to get into based on a number of factors. But one of those major criteria are volume. He wants high volume assets. And the reason for that, other than the obvious, is that they tend to close faster. And we're trying to turn capital as quickly as we can with this strategy. So closing them fast is one of the keys to success. We saw his average time per deal, 332 minutes. That's insane, right? So he's very aggressive on the strategy, and he's closing deals fast, and he's closing a lot, and that's why he's making the gains that he's making. That's not where I wanted to be. This is where I wanted to be. So multi-deviation settings is something he's also using, and that means more signals. I'm going to explain what that means in a second. But the first thing I want to explain is that you've got to be able to manage your risk on this strategy. And this is a bit of a high risk strategy in that we're combining multiple signals, riding the drawdown and DCAing on that drawdown to build a full position and ultimately, hopefully close it in a short amount of time. Now, when Bitcoin especially is very volatile, you guys will notice we see a lot of alt signals start to fire before Bitcoin makes a big move, especially a big move down. And, conventional wisdom says that's people exiting alts to get into Bitcoin. So that's an indication that a lot's going to happen. So, like for example, the past couple of days, when we saw a Bitcoin pullback, a lot of alts tanked, and historically, as our numbers show, the overwhelming majority of those recover into a profitable state. But when we have this kind of volatility, it typically means, or at least historically has meant, more drawdown, and trades don't close as fast. I still have trades that are open from the dump a few days ago, but they are recovering. And I'm starting to close deals now, and the ones that were deep leaders are now getting into a range where they're approaching profitability, and I'm confident that they'll get there. If I find a point where I'm not, then I kill them. And that a lot of that has to do with obviously how the market is evolving, and also how they look on fire charts. So I'm using all of these tools together, as is Brad, to get there. So now we're going to get into the multi-deviation settings part of this, and you might want to grab some notes for this. And this time we're going to go to a multi-channel screen, and I'm going to show you how we set that up, and how we're playing this. So let's do, no particular reason why I picked Steam. It just happens to be open because I had a trade here recently. Now you see a bunch of channels, and this looks different than the screen that you saw before. Okay, so what we've done is first of all cleared out all of the fib channels so you don't see them. And again, you can see how to do that in that earlier video. What you see here is the top and bottom range of each deviation setting. So the top line of this pink one, for example, is the 1.0, and the bottom line is the 0 on a 3% deviation. So I'm just going to click these out here for a second so that we can add them in one by one. And actually, on a standard setup, so the default setting for Bitcoin, actually the default setting for Bitcoin alt pairs is 6% deviation on the pair. Okay, and learning how to adjust those deviation settings is all back in that prior video. So sometimes you get a lot of signals when we're in that 6% range, when an asset is there, and sometimes it's slow, right? And so the 3% deviation was something that we originally created for USDT pairs to kind of fill in the gaps when we weren't getting signals on BTC pairs. If any of you have been with us for a really long time, you're familiar with what we call Brad bots. And Brad bots were because Brad, who is the brainchild of this accumulation strategy, was also the brainchild of putting those Brad bots together and getting a more volatile a setting that would trigger alerts when there was less volatility. So that's why we created the 3%. And how many DCA shots is Brad taking at these trades? Good question, XBT. It varies. It varies on really what your confidence is. I don't know that he has a locked in set, but I think typically 4 to 5 is when we start to go, do I really want to go deeper? And it just depends on the asset at that point and where you are. And there are also different strategies. You could martingale your DCAs, so you're making larger DCAs than your opening trade, so you DCA faster. Because he started this strategy with very little money and has been managing the money very tightly. He's doing even entries, right? So each DCA is exactly the same size as his opening position. I do mine, as long as I've got the capital available to do it, I do mine a little bit bigger. It's totally up to you. So back to that screen. So this is a 6% setting here. Now, when I turn on the 3%, and you simply, to do this, you overlay them on the same chart. You can install the indicator as many times on the chart as you want. And what we've done here is we've color coded each one and all of the flags that go with it. So when you see an alert and you see a TP marker, you know it's associated with that setting. So all this purple is in the 6% deviation, which is the default setting. Now, when we add 3% deviation, let's see if that gives us more signals. It gives us a significant amount more signals. And in periods of extreme volatility, you may not want to take all these, right? Because they're the same size. You know, there's not enough space here in between this position and this position to really want, for me anyways, to want them both. And these aren't better than this. So we look for some separation in these signals in terms of DCAing, right? There's no point in DCAing in the opposite direction. You don't want to take those signals blindly. And, you know, I personally like to have a bigger gap, 5% or better, really, because I can make up some ground. But, you know, 3 to 5% range is kind of a minimum I personally look for. Again, this is a matter of what works for you, and you have to manage your risk in a way that you're comfortable with. So now, sometimes we have this drawdown, right? And that obviously sends you deeper. But this would be a good DCA position, where this might not be such a good DCA position, unless, of course, your first entry was up here, right? So would you want to take all of these? You start getting pretty deep. So that's why, again, we look for some separation between the tiers to DCA more effectively. So now let's add another level. And as you go wider, this requires basically the wider you go, the higher number you go in deviation settings, the more volatile. It's for more volatile assets. So, for example, if you're going to try and apply MTF to a stock, you may find that it's not nearly as volatile as alts are. So you might want a tighter deviation setting. And when you set up the chart, you'll see where the dips are, and you'll see where the signals show up, and that's how you kind of find the sweet spot to where your settings should be. So we went to now at this point 9%, and it's gone deeper, right? So here's a different color, and you see we've got a couple signals here. We don't get as many, we don't want as many, but these are pretty strong here, right? So let's look if I turn the others off so you can see how price is relative to this, just to make it easier to see. These were quite solid, and then of course you get a crazy wick right here. You know, you can't really bank on these; they happen, but this is not what we're playing. We're not playing wicks. We're playing the consistency of the mean reversion bounce. Now you can do this, and you can do as many layers as you want to do, right? So, there's going to be a point where it's not hitting the target anymore. You could go tighter. You could go looser. That's up to you. It's up to the asset that you're trading. Those are decisions that you got to make, that you really have to make for yourself. I hope that you are gaining something out of this that you think you'll be able to apply into your own trading. There's a lot of different ways to use this. You just, you got to get comfortable with it. And if you are going to try this, I suggest you start small. Get a feel for it. Get a feel for the indicator. Get a feel for the DCA strategy that's going to work right for you. Get a feel for the deviation settings that you want to use, so that you can, you can do this on any asset you choose. Kind of the deviation settings that I give you are kind of the defaults that, we use 6% as a default for BTC pairs. We use 3% as a default for USDT pairs, but adding the additional deviations can be done to either get more signals or to cut down on the number of signals. Right? If you're just getting hammered with 3% deviation, and you're not getting enough difference in price to DCA effectively, you may want to turn those 3%ers off and just ride the deeper deviations until you're getting to a good DCA point. So that's basically the long and short of how that works. I told you guys at the beginning of this thing that at the end I was gonna have something special for you, and I am, because I like to keep my promises. So here's what we're gonna do. I know we have, gosh, we've had a ton of new subscribers here in the past couple of weeks, and I can't tell you how appreciative and grateful we are of our community. Truly the best trading community on Telegram. And you guys have been giving us the support and the encouragement to do what we do. We're a very young, early stage startup, and it's great to have this kind of support and enthusiasm early on. So to help more of you get a hold of these tools, we're going to offer a quick flash sale and a very limited number. All right. So there's only 10 of these. So the next 10 people that want to get a hold of the tools, I'm going to offer you a discount and a promo code to get our premium plan, which of course includes the MTF Mean Reversion Indicator. It also includes the Trend Precognition Indicator and the fire charts and CVD charts that we share pretty much all day, every day on Twitter and in our Telegram group. So to get those tools, obviously, you just need to go to the website at materialindicators.com and head over to the products, and you can see what you can get a kind of review on the products and see what's there. You can compare the pricing of the different plans. This offer is for a premium plan, any duration, whether you want to do it for 3 months or 3 years. And on those longer ones is where you're going to save your money. And I will also preface this by saying the longer term plans, the multi-year plans, a lot of you have asked about getting into our premium channel. And the premium channel is a much smaller group, same valuable content being shared. A lot of the same traders, everybody that's in the premium group is also in the open community. But there's a lot less to go through. The main community is getting overwhelming with the amount of content. So people in the premium channel get first access to preview new tools. They get access to test new tools as they are making their way into beta, and of course a lot less content, but very valuable content at that, I should say. So here's the deal. Get ready. Write this down. 10% off. Use promo code premium10, no spaces, premium10 at checkout. It's limited to the next 10 subscribers. I hope those of you who've been thinking about getting these tools, whether it's MTF or fire charts or trend, and you can apply this to an upgrade as well. So if you're an existing customer and you want to upgrade to the premium plan or go for longer duration, we'll honor that discount as well. You can DM me if you're an upgrade, and I'll facilitate that for you on the back end and prorate whatever you paid to get to where you're at. So again, promo code premium10, get 10% off. I hope you enjoyed the content and gained something out of this. A couple of questions here. Let me address these. Besides being a high volume asset, what other conditions do you have for your choices? Well, there's some coins that, quite honestly, we don't like, but we all have our own criteria, right? So personally, something that Brad and I talk about frequently is barcode shitcoins, right? They're frustrating. They are challenging because they can take a really long time to close. They can bleed very, very deep, but by the contrary, they can also do very, very well. So, they do perform, they just don't perform as fast typically as the ones, as some of the other coins. There are strategies for DCAing barcodes pretty effectively if you can get your order filled. That's the problem, right? Sometimes it's really difficult to get your order filled. You also need to consider how much you're putting on a lot of these coins, because especially, those shit coins just don't have um, the liquidity to handle your trade. So I can tell you that a lot of coins, you'll find you're putting your DCA in there and it's not getting filled, um, as a limit order. Obviously, if you do it as a market order, that'll be a different story. But you end up with slippage often in that scenario. What else do we have here? How risky is it to use MTF on leveraged FTX tokens? Is it popular? I'll be honest with you. I don't trade leverage. Fred, on the other hand, trades the leverage tokens on Binance. I'm not familiar with what is what's being used on FTX. So that's something that you should look into. What I can tell you is, if you look at the asset, if you overlay the chart and see how it works, you'll be able to make that decision. But I'm not the guy that you want to ask about leverage. Maybe XBT 3D could weigh in on that in the Telegram community, if that's something that you want to talk about. How many trades do you have open usually at the same time to reach Brad's compounded gains? Oh, Veronica, this is going to make you very happy. For those who don't know Veronica, she's well known for having, I don't know, a zillion trades open at once. You're a mad woman, actually, Veronica. I wish I could have as many trades open as you do. We're I don't know. We're old, simple guys. I can't keep track of that many at once. And of course, you have to remember you could have multiple positions open on one coin. Brad specifically typically spreads his stack across 10 trades, lets his bot take 10 trades. So, and I'm somewhere in that range, actually, give or take, because I'm trading on multiple accounts. So I started out with 10. I got overwhelmed. I quickly had 30 trades to manage and scaled it back a little bit. And now I'm working my way back up as I've had some gains here in the past couple of days, and I want to compound. Now, here's another very, very important part of Brad's strategy, and that is compounding. Okay. You don't just get to those numbers by just doing the same thing over and over again with the same size stack. Every time he closes a series of trades, he resets his bot to compound, use the trades that he just use the Satoshis that he just earned to increase the size of his trades. Now you get to a point where you either start getting your trades too large and you're having problems getting filled, or you're having problems with slippage, or you get to a point where, you can counter that by just increasing the number of trades. So, depending on what kind of stack you're working with, that's something that you need to manage as well. I will tell you that there are far, far, far more signals than we are capable of taking all at once with the capital that we're working with. That may change. Hopefully it does over time. But it's something to consider. So that's another reason it's good to focus on a group of assets that you have confidence in, a group of assets that that perform well. And so, in terms of the criteria, yes, we talked about volume, but we also will go back and look at historically. TradingView only gives us, I think, about 3 weeks of historical on these 1 minute candles. One of the many reasons we're trying to get off TradingView, and we will eventually, and then we'll have all the back testing abilities that we want. And you'll be able to scroll back as much as you want, but scrolling back and seeing how the coin performed on the recent signals is another criteria that we use to kind of filter our way, into these and program what's going to go on the bots. Hope that answers your guys' questions. If you have more, by all means, I'm in Telegram every day, in the community every day. Feel free to ping me or Brad or Fred. We're happy to chat with you about it. Hope that you guys will take advantage of the offer. Again, this is only for 10 users. So 10 subscribers. When they're gone, they're gone. So take advantage of that opportunity. Use promo code premium10 to do so. Again, nothing that I shared with you today is trading advice or financial advice. This is a risky, high risk, high reward game, right? Reward likes to take its risk, right? So keep that in mind. Do your own research. don't ever risk more than you can afford to lose. And by all means, oh, someone said he's an existing subscriber. Let's see. Yes. Yes, you can upgrade on this offer as well. So thanks again, guys. We appreciate you. If you do like the content, I really, really appreciate you sharing this with your friends. Please give us a comment, like, and subscribe. Our YouTube channel is growing too, which is pretty cool. Eventually, we're going to get to actually get our own name instead of these crazy characters that are our YouTube address. And if you want to contact us, find us in our community. Follow us on Twitter at @mi_algos, and you can find us in our Telegram community. The links are in the description below. Again, thanks again for all of your support. Glad to have you guys with us. We have the best community of traders on the planet. Hope you come join us on Telegram. My name's Keith Allen from Material Indicators. Have yourselves a profitable day.